Hello everyone. I'll start again. I think we're just so exhausted with what's been going on today or been going on for the last few weeks. We can't quite get ourselves together. So welcome to, for us here this evening's webinar. But before we start, as usual, please may I draw your attention to the disclaimer that I know you can see on the screen, and never has it been more appropriate than in the market conditions that we are at the moment. If you do enter to trade and trade these markets, please don't ever use money that you cannot afford to lose. Right, very quickly before we move to the charts, what we're going to do in this session, we're obviously going to look at the markets and see what's been happening, and hopefully try and see what is likely to happen next. And we do that through the prism of volume price analysis with our quantum trading tools. And if you've not come across the methodology before, here it is. It's all explained in this particular book and others that are up on Amazon at the moment. And it's like with any methodology, it's much easier if you actually sort of see it in action on the charts, and what it can do, what it tells us about what is happening, and more importantly, what is likely to be happening next. What we've done with that one, there is also a companion to that book, which is, as we sell it as a box set, but it's actually a Kindle digital version of a box set, where there are examples taken from the markets across, primarily for this one for stocks in all time frames, just explaining how the methodology works. And this is myself and David, and I don't think I've got one about the two. No, I'll stop there. We'll have a look at the quantum tools actually on the charts. Right, let me just pull that down. No, in fact, let me do that one. Let me go over here. This is a site I've recently come across called teletrader.com. You might want to check it out. I've never come across it before. Someone just sent me a link about it. I think you can sign up and you can get data and an economic calendar, etc., because I want to obviously talk about what's been happening vis-a-vis on the markets today. Words sort of fail me. We've had some spectacular price falls, spectacular price action, coronavirus being one of the reasons, but the second reason is obviously what has happened with to the oil price, which has absolutely cratered. And in fact, David's going to look at oil later in the session. I just draw your attention also, for those of you who may not know, but I actually do have a personal site. It's annacooling.com, and this is last week, where the blog post, there was one about the indices in particular. It was it the YM, David, that was on there? I think it was, yes. Or was it NASDAQ? No, it was the YM. But really, all the indices, the price action and all the indices are pretty similar, and really just explaining what has been happening from the perspective of volume price analysis. And there was also a blog post where about 10 days or so ago, they did look as though there was a little bit of a rally in oil, and it was sort of tradable rally, as it were. But this was before the price actually it just collapsed over the weekend, mainly because of the row that has erupted between Russia and the Saudis. And in fact, the last paragraph of the analysis was that it is very bearish, and I actually said a move into the $30 per barrel region looks a distinct possibility. Well, in my wildest dreams, I never thought it would come around quite so quickly. If you're trading Forex, this has also obviously been reflected in the various Forex currencies, the commodity currencies, and the currencies that are very closely tied to oil, one of which is the Canadian dollar. And we'll look at the currencies as well, just to see what they've been doing, because everything is reflected in the moves in the currency markets. And in fact, Forex trading has always been held to be a terribly risky market. You should stay away from it, stay with stocks, stay with bonds, stay with commodities. Well, I can assure you, I think given what's been happening in the last week or so, I think Forex has been remarkably stable. Don't you agree, David? And you know, and certainly not the sort of very high risk market that it's often marketed to be. But just staying with oil and going back to this site here, and this is really quite interesting. There's lots of reasons why there is this issue in the oil market. Is a very political market, and what I'm going to say does apply to oil, but it also applies if you trade just using technical analysis, just using a chart in one time frame. That's fine. It'll work, and you know, you can take trades, whatever your strategy, whatever your tactics happen to be. But markets, they don't operate in a vacuum. They don't sort of rotate around their own in their own universe. They're all interconnected, and as well as that, on top of that, you have political influences. You have geopolitical events like war. You've now got the coronavirus, but the oil market in particular. If oil is something that you are interested in, and you know, you want to take trades either in the futures market or on one of the CFDs that are offered by forex brokers or an ETF, you really have to understand the drivers of that market, and who are the main players, what they, you know, how they react, why they react in the way they do. And certainly with Russia and Saudi Arabia, you've got, I mean, I think I'm going to write a post about it because I just wrote some notes for myself. Russia is allied with Iran, who support Syria. Saudi is obviously allied with the US. You've got religious differences. You've got power politics in various regions of the world. You've got China also, which is a supporter of Iran. And all this is going on in the background. And obviously you have OPEC, and really what's happened over the weekend is this real fracture within OPEC. OPEC is the cartel which manages the oil price and the oil market, and they really have fallen out in a very, very big way. And what this article points out, that Russia, if they can keep oil prices, as I said, for as low as, you know, they don't care. They can carry on for 6 to 10 years, even if oil prices drop to $25 to $30 a barrel. So it's a very, very serious situation. So let's go and see what's actually on the charts at the moment. As I said earlier, with regard to the currencies, this is all reflected, the risk sentiment, what's happening in the oil markets, in the individual currencies. This is our CSI indicator here. We've got the yen have been rising strongly. It has had a bit of a pullback because I think the indices did sort of stabilize. The circuit breakers were triggered because the price the fall was so extreme, but it looks like that's going up again. This is the Canadian dollar, really very, very beaten down here, as I said, because connected with oil. They are sort of bunched in the middle here. This is the hourly chart, so it probably tells us there's not a lot of price action going on at the moment in Forex, which is not surprising given the you know, what the markets have been through today. This is the pound yen, and we can see here this is this big fall that we had earlier on. It's really more a case of yen buying in response to market sentiment, but as you can see, we've had an attempt to rise here, but it's really back in consolidation. Markets have to calm now and really just take a very, very deep breath before deciding what's going to happen next. And with that, can I pass over to you now, David? Is that okay? That's lovely, thank you. Oh, and if you've got any questions on anything we say, anything to do with VPA or the charts, then please just put them into the chat box and I'm more than happy to answer them for you.